So Google drops earnings in a few days, and honestly, this one kinds of soap opera. Wall Street wants 160 billion in revenue, that billions with a B in 3 months, and $2.86 per share. But the headline number almost doesn't matter. What actually decides how the stock trades is a fight between two stories. AI spending is finally paying off versus AI spending is a black hole. 5 numbers that actually matter. One is cloud growth. Last quarter was 20 billion, up to 63%, sitting on a 460 billion backlog. That's not a pipeline, that's a waiting list. $500 billion of work already sold that they just haven't delivered yet. The problem with the numbers like that, the bar is now on the moon. Anything under 50% growth, and the headline writes itself, it's a slowdown. Number 2 is AI Capex. 85 billion this year, up from 75. Nobody expects it to shrink. What everyone's listening for is one sentence from the SFO about is stabilizing. One sentence, and that's about 5% stock move hiding in the conference call, in my opinion. Number 3 is search, still 56 of the entire company. Number 4 is EPS against 2.86. A year ago they did 2.31. Profits has been running stupidly hot. And number 5 is guidance. Beats are about the past. If they raise the full year outlook, that's actually a news. Everything else is a decoration then. Okay, so why is this quarter such a pressure cooker? Give me 90 seconds to explain, that's all I need. Picture quarter 2 last year. Google beats on revenue, beats on earnings, and the stock reaction is a shrug. Why? Because buried in the report, Capex jumped from 75 to 85 billion, and Wall Street collectively went, "You're spending what on GPUs?" Then quarter 1 and 2026 happens and they flips the whole script. Revenue up 22%, cloud up 63%. Pichai out here saying AI is lighting up every part of the business. Sure, but this time the numbers actually backed him up. The market takeaway was, whoa, this isn't a money pit, this is the business now? But two clouds still hang over the party. The DOJ genuinely wants to break the pieces of the search. And other bets, Waymo and Franks, lost another 1.1 billion, which at this point is basically a subscription Google pays for. So that's the setup, proof that AI bet is paying off without letting the spending or the lawyers steal the headline. So now is the question where the money comes from. Quick map of the machine baseline from the last quarter 2, search and other was generating 54 and 2 billion. Search, maps, play, the core ad engine and the majority of the company. YouTube ads generated 9 and 8 billion, still growing but decelerating. TikTok competition plus the structural problem that shorts monetize worse than long form, but still YouTube grows. Google Network 7 and 3 billion, AdSense and AdMob. This is a slow lane. Google Cloud 13 and 6 billion, then 20 billion by quarter 1 2026. This is the multiple. This is why the stock trades where it trades now. Other bets, 373 million revenue, 1.1 billion losses, that's just a moonshot tax. So just one sentence, search and YouTube pay the bills, cloud sets the price, other bets burns the change. Now the layer that separates a trade from the investment. Now revenue trajectory, 96 and 4 billion, then almost 110 billion, and now it is expected almost 117 billion. So growth of 14%, then 22%, now it's 21 on a bigger base. That's not just growth, that's acceleration at scale, which is rare for a company of this size. Now profitability, 28 and 2 billion net income last quarter to up 20% from the last year. Quarter 1 2026 profits up 81% year over year, with the cloud operating income below up 91%. Balance sheet, 482 billion in assets against 138 billion in liabilities, is 3.5 ratio. It's perfect, it's excellent. This is the quiet superpower. Google can outspend nearly anyone in AI infrastructure without borrowing a dollar. Share count roughly 12 and 2 billion diluted, worth watching because buybacks quietly compound CPS even in a flat quarters. So now, bull case versus bear case. Let's argue with ourselves. The bull case, AI spending is actually converting into a growth. That's proven now, not promised. Cloud is sitting on that $500 billion backlog. The ad machine is still the best on the planet Earth, and the balance sheet means that they can keep pouring money on the fire for years without breaking a sweat. The bear case, spending has now announced ceiling. 75 became 85 and nobody promised 85 doesn't become 100. The DOJ is circling the one product at 56% of revenue, and YouTube is fighting TikTok for the attention of everyone who is under 25 while making less money per minute watched. Here's the honest framing, and it's the reason this stock wipes sauce every single quarter. The bull case is about this quarter numbers. The bear case is about the next 3 years. Both can be true at the same time. That's not a cop-out, that's literally a trait. Okay, time to put my neck out. Screenshot this. I mean it, I will want the receipts. Revenue beat, I'm saying it's 117.5 billion. My confidence is about 70%. EPS beat is 2.95 against the 2.86 estimate. My confidence is about 60%. Cloud stays above 50% growth. Confidence is, I don't know, about 60%. This is my scariest call and the one most likely to blow up in my face. Capex will be guided higher again. My confidence is about 75%, maybe even 80%. And the stock next day will be going up unless the cloud disappoints, in which case none of the other numbers will matter in my opinion. So when the report drops out, we will see what will happen. In my opinion, it will go up if the cloud will be above 50%. And if we will see that AI is making more money. Now you guys, and I want a number, not a vibe. What's cloud growth going to be, above 50% or below it? And your exact percentage you think. Closest guess gets pinned on the result video forever, and try it as a smarter than me. Subscribe with the bell on so you can come back and check your call against mine.